Canada officially ended the mild recession that hit the country in the first 2 quarters of 2015. But how long will this economic rebound last? Joining me is James Blumenthal, Chief Canadian Market Analyst. James, Canada's economy resumed growth in the third quarter, but there are already signs that this rebound may not be very robust. Do you think this rebound is to be short-lived?
No, I think over a longer period of time, we will continue to see recovery. It will fall back a bit in the fourth quarter. The Bank of Canada, in its October monetary policy report, projected to 2.5% growth in the third quarter, which is pretty close to the actual, but does see it falling back to 1.5% in the fourth quarter, and then picking up again in 2016. So I would agree that I think at this point that the recent data doesn't mean that the economy is falling back. I know the September GDP was disappointing as it fell 0.5% month to month, but there were special factors holding it back in the oil sector that will reverse sort of production problems and maintenance of refineries. So one would expect to see that bounce back as we get into October and the fourth quarter. Exports were very strong. In fact, the foreign sector was very strong in the third quarter, and that may ease off a bit. It's likely to not be as strong in the fourth quarter, but still show continuing strength. So one looks for the economy to fall back a bit, but then to continue growth, pick up again in 2016. So right now, I think Canada is still on a recovery path.
The Bank of Canada was one of the most proactive central banks this year, cutting the benchmark interest rate twice in an effort to devalue the loonie. What can we expect from the Bank of Canada in 2016? I
would look for steady rates. That they're not going to. Don't see them easing. Again, I mean, there are a couple of factors there. They go down. The target rate is now 0.5%. To go down to 1/4%, you're really basically at zero rates, and I don't think they would want that. And on the other hand, and another factor against cutting rates is the strong housing sector and the high debt ratios of Canadians. So I don't think they would want to do something that would either boost borrowing and increase debt loads, and also that would be a further spur to the housing sector. So that argues against. They would really have to take a fairly big shock to see them ease again. But at the same time, the economy is not strong enough that it would be likely that they would start raising rates again. Also, it's favorable with the U.S. Expected to raise rates in just a short while after the December meeting. That's going to be a positive in the sense that it's going to hurt the Canadian dollar as U.S. rates go up. So they don't have to cut rates to further devalue the loonie. So one looks for steady rates throughout 2016.
Softer economic data is threatening to record another contraction as commodity prices keep falling with lower demand and vast supply in the market. How well is Canada's economy adapting to declining oil prices?
Well, that is definitely the one soft spot with the commodity sector. I mean, it has been adapting. I think where you really see it hurting has been the investment in the investment sector, there's much less investment in the commodity sector, and the Bank of Canada is looking for pickup in investment. I mean, their scenario is exports picking up, which they will. I mean, especially with the U.S. economy picking up. So the exports are picking up, but investments still lag. So that's the big problem. But another rate cut would change the price of oil, or really change investment in the energy sector. And also, Canada being a common currency area and having free migration, I think you're already within the country. You're already beginning to see some migration out of the oil sector from Alberta and Saskatchewan back to eastern Canada, so that there is internal adjustment. It takes a while, but I think you'll see Canada adapting just as they adapted to the boom in the oil sector.
Well, James, thank you. That's all from me. But do click back for tomorrow's weekly wrap-up, giving you the biggest market moves of the week. Goodbye for now.